We are living through the biggest financial shift in modern history, not just another recession, not just another bubble, a transfer of wealth on a scale bigger than 208, bigger than the dot-com crash, bigger than the pandemic. The United States government has stepped directly into the market again and again, not quietly, not reluctantly, but with full support from both political sides. No protests, no pushback, only action. Why is this happening? Why would the government intervene so aggressively when the crisis doesn't even look like a crisis yet? The answer explains why fortunes will be built for some and destroyed for others. Look at history. In 1971, America cut its link to gold. The dollar became the only anchor, and inflation shook every household. Families who kept savings in cash lost purchasing power fast. Those who owned hard assets like real estate saw their wealth protected. In 2008, banks collapsed under toxic debt. Citibank, Freddie Mac, General Motors, too big to fail. The government didn't just hand them money, it took ownership. It became a shareholder. It signaled to the world, these companies will not fall. What did that mean for ordinary investors? If you owned shares, your ownership was diluted. If you trusted cash, your savings earned almost nothing for years. But if you bought during the panic and held until recovery, you multiplied your money. That's the cycle. Crisis, intervention, wealth shift. History shows governments only step in when the system is at breaking point, when collapse looks inevitable, when public anger boils over. So why now? Why in 2025 has the government acted 3 times already, and why with zero resistance? That is the puzzle, and it is where the opportunity hides. Imagine you are at a poker table. Everyone has different cards, but suddenly, the dealer changes the rules mid-game. The strongest hands no longer win. The house decides who stays in the game. That is what interventions do. They rewrite the rules. They protect some. They sacrifice others. The same thing is happening now, and the people who understand this will come out on top. This is the passive path. And if you want to stay ahead of the curve, if you want to guard your wealth instead of watching it vanish, then stay with me. Because the next few years will not just test your patience, they will test whether you are on the winning side of history or not. So the question is this: if governments only used to intervene in rare emergencies, why are they suddenly doing it so often today? The answer will surprise you. In 2025, something unusual happened. The US government stepped in not once, not twice, but 3 separate times. And this time there was no shouting in Congress, no partisan gridlock, no endless debates on television. Everyone with influence seemed to quietly agree. That should make you pause. Because when elites on both sides suddenly align, it means the stakes are bigger than politics. It means there is something deeper at play. Let's take Intel as an example. For decades, Intel powered nearly every computer in the world. From school desktops to corporate servers, their chips were the backbone of technology. But in recent years, Intel slipped, profits dropped, stock prices dragged down, competitors in Asia surged ahead. Then the government made its move. It announced it would take a 10% stake in Intel, not by paying cash, not by negotiating with investors, but by receiving brand new shares created out of thin air. If you already owned Intel stock, your piece of the pie shrank instantly. Your ownership was diluted, value was siphoned from your pocket to the government's, and yet the market was told to celebrate, because the government now stood behind Intel, because national security was on the line. The truth is clear. This was not a rescue in the old sense, it was a transfer. Wealth shifted from private hands to government hands without a single vote of opposition. And Intel is not alone. Talks about TSMC and Samsung have already surfaced. If those companies give up shares under pressure, the United States will effectively control the future of semiconductors, and semiconductors are the oxygen of artificial intelligence. Think about what that means. Every AI application, from self-driving cars to medical diagnostics, relies on chips. If the US owns the supply chain, then the US owns the rules. Anyone who wants access must play by their terms. This isn't just about technology companies. It's about every business that will depend on AI to survive. It's about every investor holding stock in global markets, and it's about every household whose daily life runs on digital systems. When a government takes this kind of position, the ripple effect is massive. The winners are chosen, the losers are silent. The question is no longer if interventions will happen. The question is who benefits when they do. So ask yourself this: if the government can step into Intel without spending a single dollar, What stops it from doing the same to other giants tomorrow? And what will that mean for your portfolio, your savings, and your future? The United States has played this game before. Control the key technology, set the rules, collect the fees, look back at the rise of telecommunications. Every call across borders, every tower built in Europe or Asia was tied to American patents. Qualcomm and Motorola held the keys. If you wanted to participate, you paid. The same happened in global trade. Every international wire transfer flowed through U.S. systems. Every major transaction required dollars. That invisible toll booth gave America leverage over the entire financial network. Later came environmental standards. Nations were told they could only emit a fixed amount of carbon. If they wanted to grow beyond that, they had to buy emission credits. And who controlled the credits? The same powers that printed money at will. This was sold as fairness, but in practice, it created another hidden tax. Developing nations had to pay developed nations for the right to grow, and the payment always circled back in dollars. Now a new stage is beginning. AI is positioned to become the next control system. Instead of oil, instead of carbon, the scarce resource is data and chips. The United States wants to own the production and the infrastructure. If it succeeds, every nation that wants to compete will owe a toll. Imagine it on a personal level. Your phone, your car, your medical records, your online life, all powered by AI tools, and each one carrying a silent tax, not a line on your bill, but embedded in the cost of everything. That is why governments are acting quickly. They know whoever sets the rules first sets them for decades. They know technology isn't just about progress, it is about power. The world has seen this playbook. Whoever dominates a breakthrough industry becomes the reference point for everyone else. After World War II, America became the reference point. Now with AI, the same attempt is underway. So the real question is not whether AI will dominate. The real question is who will own the rails it runs on. And when those rails are owned, how much of your wealth will quietly be redirected through them? AI is being positioned as the new dollar, the asset everyone needs, the system everyone must use. Think of oil in the 20th century. Nations that controlled oil shaped global politics. Wars were fought over pipelines and wells. The currency of power was barrels per day. Now replace oil with chips and compute power. Without them, AI cannot function. Without them, economies fall behind. The United States is working to secure 3 layers of control. First, the chips. From NVIDIA to Intel to TSMC and Samsung plants being pulled onto U.S. soil. Chips are the organs of AI. Without chips, AI has no body. Second, the algorithms and compute infrastructure, cloud services, massive data centers, cutting-edge models. Almost all are developed or funded by U.S. companies. This is the brain of AI. It processes, learns, and makes decisions. Third, the currency and payment rails. Any nation or business using these systems will pay in dollars. It doesn't matter whether the service is healthcare, transportation, or defense. If it runs on AI, it pays the toll. That is how a silent tax is created. Not a law, not a bill in Congress. A technical reality embedded in the system. For households, the shift will feel invisible at first. Subscriptions go up a little. Phones cost a little more. Electric bills rise because AI-driven grids set prices differently. It will not feel like a tax, but it will drain purchasing power the same way, and for investors, the stakes are even higher. Hold the right companies and you could ride the wave of AI profits. Hold the wrong ones and you could watch value vanish as government ownership expands. This is why the focus is not just on opportunity, it is on survival. Because when every product, every service, every job depends on AI, those who are locked out will fall behind fast. That leaves one critical question. When the government can dilute shareholders at will, when companies can be nationalized overnight, what protection do ordinary investors really have? When Intel issued new shares to hand the government 10% ownership, investors paid the price. Their stake in the company shrank instantly. They didn't sell anything. They didn't make a decision. Yet their wealth was reduced. This is the mechanism of dilution. A company prints more shares. The pie doesn't grow. Your slice gets thinner. Now imagine this applied to giants across the tech world. TSMC in Taiwan, Samsung in South Korea, even companies inside the United States. The government can pressure, regulate, or offer subsidies that come with strings attached. If the deal requires equity, the result is the same. Your ownership weakens. For ordinary investors, this feels unfair, but in legal terms, it is perfectly allowed. And when it is framed as national security, opposition vanishes. What options do companies have? One is to comply, give up shares, and hope for protection. Another is to reject subsidies and bear the higher costs of competing alone. Both paths are dangerous. TSMC, for example, has poured billions into U.S. plants. If it refuses government demands, it risks losing subsidies and facing tariffs. If it agrees, its technology could be siphoned away. Either way, shareholders carry the burden. For investors holding these stocks, the risk is silent but real. Prices may look stable in the short term, but behind the scenes, ownership is shifting, wealth is transferring, and the long-term direction is clear. This is not a one-time event. It is a pattern. Intel was the beginning, TSMC and Samsung could follow, and from there, no company is off limits. The lesson is simple. If the government can become the biggest shareholder overnight, then stock markets are no longer a level playing field. They are a field where the referee can change the score whenever needed. So the question becomes, if you build wealth in public markets, how do you protect it from being quietly diluted away? Winners and losers are being chosen in real time. Old elites who thrived under the last system may see their fortunes stripped away. New elites, connected to the flow of AI and government-backed industries, will rise. This isn't speculation. It is how every major economic shift has played out. The Industrial Revolution created new titans while crushing old trades. The Internet era minted billionaires while bankrupting traditional retailers. AI and state-directed ownership will repeat the cycle on an even larger scale. For ordinary investors, this means exposure to two risks. First, direct losses from dilution or government interference. Second, opportunity costs from staying in the wrong industries too long. Look at retail investors who stayed in coal companies when energy shifted. Look at those who ignored the rise of cloud computing. The cost wasn't just losses. It was missing the upside elsewhere. The key is defensive positioning. Hard assets like gold and silver remain a shield when currencies weaken. Real estate in stable locations provides income even when markets swing. Cash flow businesses survive downturns because they keep generating money. During uncertain times, speculation is deadly, but protection is powerful. It keeps you in the game long enough to capture the next wave. Think of wealth not as a sprint, but as a fortress. If your walls are weak, every new storm will tear them down. If your walls are strong, you can hold out until calm returns. The passive path is about building that fortress step by step, decision by decision, not gambling, not chasing hype, but protecting, preserving, and positioning. The transfer of wealth is happening whether you like it or not. The only choice you have is whether you let it pass you by or set yourself up to benefit from it. So ask yourself this: when the dust settles and the new financial order is clear, will you be among those who protected their assets or among those who gave them away without even noticing? You don't need to predict the future to survive in these conditions. You only need to react correctly when the signals appear. Think of investing like setting up safety systems. A fire alarm doesn't predict when a fire will start. It reacts instantly when smoke rises. That's enough to save lives. In the same way, your portfolio can be designed to react instead of guess. When markets show weakness, you reduce exposure. When they show strength, you participate with limits. You don't need to know the exact day of the crash. You only need to move when the warning signs flash. This approach avoids the gambler's trap. No one can call every top or bottom, but anyone can build rules that keep losses small and wins larger. Consider trend following. When a stock shows a consistent upward path with strong volume, you ride it. When it breaks down, you step aside quickly. Over years, this discipline beats emotional trading. Now add defensive layers. Precious metals like gold and silver act as insurance. They don't always grow fast, but they hold value when trust in money fades. Cash reserves allow you to buy during panic instead of selling in fear. Defensive stocks with stable dividends can soften the blow of downturns. For North American households, think simple. Keep 3 to 6 months of INSs in cash. Dedicate a slice of your portfolio to assets outside the stock market. Avoid concentrating too much in tech names that may be targets of government control. This system keeps you alive in storms. It keeps you ready for opportunity. It ensures you are not wiped out when rules change overnight. The passive path is about patience and preparation, not reacting with panic, not falling for hype, but creating a plan that works even when the unexpected happens. The world is shifting. AI, chips, and interventions are the headlines. But for you, the focus should be simple. Stay in the game, protect what you have, and be ready when the tide turns. Ask yourself this: would you rather chase short-term gains and risk losing everything, or set up a system that steadily builds wealth no matter what the headlines scream? Here are the steps you can take to protect and grow your wealth in this environment. First, build an emergency reserve. Cash in the bank gives you breathing room when uncertainty strikes. It stops you from selling investments in a panic just to pay bills. Second, allocate part of your portfolio to hard assets. Gold and silver don't rely on the promises of governments or corporations. They hold value when trust breaks down. They act as a shield when currencies weaken. Third, approach AI-related investments with caution. Yes, the sector will grow. Yes, fortunes will be made. But hype attracts bubbles, and bubbles always burst. Focus on companies with real cash flow, not just flashy headlines. Fourth, strengthen your income streams. Cash flow is king in unstable times. Rental income, dividend-paying stocks, or a side business all give you stability. When markets swing, income keeps you steady. Fifth, invest in knowledge. Read, study, and question. The more you understand the shifts around you, the harder it becomes for wealth to slip through your fingers unnoticed. This is how you prepare, not by gambling on the next big winner, not by hoping the government won't change the rules again, but by building a foundation that keeps you safe while the world reshuffles. The passive path is about freedom, not freedom from change, but freedom from fear. When you are prepared, change becomes opportunity. So take action today. Like this video so it stays saved in your playlist. Subscribe to the Passive Path so you never miss the strategies that protect your wealth. Comment with your thoughts, because sharing ideas sharpens your perspective. The largest transfer of wealth in history is already underway. Some will watch it pass them by. Others will position themselves to benefit from it. Which side you land on depends on the choices you make now. I wish you success and good fortune as you walk your own path. Feel free to explore other videos on this channel to deepen your knowledge and sharpen your plan. Take care, and I'll see you in the next video.